Good afternoon, Scott Redler, T3 Live. Welcome to today's special report. The report today is on Apple computers. At this particular point, there's a lot of headlines out there about Steve Jobs' health, and a lot of investors are starting to get pretty emotional. Everyone knows that Apple has had an enormous run. It's at historic highs. Understood. So there's a reason for a bit of concern because stocks do correct from time to time, so people are thinking, would this be or will this be a catalyst in order for Apple to take a discount or pull in? It can. As far as the way the fundamentals are positioned in Apple, it's doing unbelievable. They've been first to market ever since the iPod, and now we're only in iPad 1.0 looking at iPad 2.0. Fundamentally, their PE is like 20 now, forward-looking PE of 14. They're supposed to make $25 a share in cash. I think they're going to do more than that, and they're working on all cylinders. Last time Steve Jobs it came out that his health was in question, it was a real big shock to the stock. The stock came off pretty hard. It was pretty quick. This time around, Wall Street is a little bit more comfortable knowing that Apple can continue to operate without Steve Jobs at the helm. And yes, he is the pioneer, and he's done an unbelievable job. Besides being an unbelievable businessman, he's an unbelievable human being and family man. And my heart goes out to his family that is probably more concerned about him than the shareholders. But understandably so, if you're an owner of this stock, you need to figure out a game plan on how to handle what potentially could go on over the course of the next few days or the next few months. Because at this point, everyone's in the same ballpark. No one really knows the effect it could have on the stock, how it's going to trade. All you can have is a plan. Now, I've been trading Apple since the beginning of my career and very, very heavily over the course of the past few years. And technically, Apple has handled itself very, very well. It's always traded with patterns. You can get involved on a macro level for a move. You can get involved on a swing level for a few days. You can make money short at times. And then there's also intraday action based on gap ups in the morning or various different types of strategies if you're only day trading intraday. The first thing you have to say to yourself, who am I in the world of Apple? Am I an investor? An investor that's holding the stock for the past 5 years or 7 years or even 2 years and have enjoyed a huge run. If that's the case and you need your money, you know what? Take a little bit off the table. Maybe sell half. Or what you could do if you're a little bit more astute, sell some in-the-money calls. Go out 3 months, sell. Right now the stock's around $357. Go out and sell maybe the $330 calls or the $300 calls. What you do there is you take in premium. Okay, probably $20, $30 of premium. So really it's as if you're selling it at around $380, $390. Okay, but then if we do come in and the market has a little volatility, you're also covered up to where you sell the strike price on the option. So if you're a long-term holder, you could do a few things. You could sell half if you need to. You could sell some in the money options, or you could just sit tight. Right now the company is still, I think, in the third inning of their product cycle overall and still could go over the course of the next, whether it's 3 months, 6 months, 2 years, well above $400. So if you're in there for the long term, you know what? You still could take advantage of the opportunity if you do get an emotional down move. I'm going to go over levels as a trader to take advantage of it, but if you're an investor that wants to add to their Apple position, there are going to be a few key levels to look at. Now, what I'm going to go over with you is how I really trade Apple, which is technically I traded intraday, I traded weekly, I traded daily. It all depends on what's going on. So I'm going to do a little bit of the anatomy of what has happened with Apple over the course of the last year or so. So if you take a look back here, I'm going to even start just this last recent move. Okay, you see a big channel here, guys. Stock traded very well as it absorbed a huge move from about 140 all the way up to about 280. Hit a high here, and then for about 6 months, you had a channel. What a channel does is it absorbs a prior move. So people who were involved in this stock way back here, okay, which you look at this run, they've enjoyed a nice run, so they take some profits. Some people think that Apple couldn't go higher here. They thought, okay, we just went from 100 and change up to 277 or so, and it's not going to go any higher. So you have people short, and you have people who want to take a trade. So what you have here is a level of consolidation to get some people out of the trade who don't think it's going to go higher, some people who are shorting it thinking it went too high, and then what it does is it creates a channel to base future action on. So right here, Apple went through this channel for a nice 6 months. So the way I traded it is, every time we hit the bottom of the channel, you buy a little, okay? Until this last time when you had a nice little downtrend here to give yourself an entry that not only took it to the top end of the channel, it actually broke through, retested, and then went again to a new level, okay? This time, this was, I would say, starting back in the fall. It came up, went through another little channel here before breaking out again, into the new year. So the question is, where are we now? On the latest action we've had was earnings. You guys remember earnings? Earnings came out on this day. This was also the day that they announced that Steve Jobs was going to not be doing the day-to-day action, that he had to take care of some of his health issues. And the stock didn't go through the old high of 348.50. Right here, right guys? Remember? So what did it do? It came back and retested the prior breakout. So that was a decent entry for a cash flow trader, for really anyone out there. Okay, and then from here, okay, had a little bit of a rally, put a higher low in, and this time put in a wedge type pattern, which then gave cash flow traders another way in, another way to play this stock for a new high move. And until yesterday, the stock hit a high of 364.90. So today is really the first down day. So as of right now, the stock isn't oversold. The stock hasn't corrected at all. So with some of the news and the headlines of Steve Jobs not feeling so well, it could actually cause a little bit of a correction in the stock that we're going to measure along the way. There are a few levels that I'm going to look at. One of them, real quickly, is a retest of this support, which is right here. Okay, this I think will happen because it's just too easy for it to get down to, and it happened a few times. This level is 353. So this is a really this is a micro level to test, and it's also the 13-day moving average. This actually could be tested tomorrow, and tomorrow is I think February 16th. Okay, so that's one level. Okay, then you have another level, which to me would be a bit more compelling if it actually happened tomorrow, which is about 348, which was the prior breakout from the old high. So it comes in around right here. So real micro, you have this level, a little bit more compelling, you have this level, and then you have the 50-day moving average, which is around 336, which Apple tends to not really test that. So that would be pretty unusual for Apple to test. If you look since the last breaking of this downtrend, Apple has never made it only once back to the 50-day. So it can go to the 50-day and then continue to make new highs. So right now on an active trading or short-term basis, I'm going to be watching this tomorrow morning, and if we see this tomorrow, then what I would think is if tonight he's supposed to go visit the White House with Eric Schmidt and with a few other of the new CEOs and entrepreneurs of this day and age. So if he doesn't show up to that meeting tonight, I think people will get a little emotional and say, wow, Steve Jobs is probably pretty damn sick to not go visit President Obama. So we could see another move lower tomorrow into that area. Okay, if he goes to the meeting and he shakes Obama's hand and there's headline, Steve Jobs meets the president, people say, oh, I guess he's not feeling so bad. So you probably get a little bit of a bounce. So short term, tonight is important. Okay, does he show up to the meeting? If he shows up to the meeting, Apple will probably open up a little bit tomorrow. If he doesn't show up to the meeting, I think that we go down and we test either this level or this level. So to me, I'm going home flat Apple. My last buy for a real cash flow trade was when it broke above 348.50, and I sold around 353-ish, and I've been just cash flow trading it for now. So with this out there, I'm going to stay a little bit out of the way because there's no need to be involved it's almost like taking the stock into earnings. You flip a coin on what's going to happen. So to me, it's not a compelling area short term, and we don't know what the event's going to be. So with that said, these two levels could be tested tomorrow based on what happens tonight. But what happens in the future, whether or not he does return to Apple, is something we're going to have to be on the lookout for. If he doesn't return to Apple, chances are, and it's announced, it could get a little bit more emotional. And if you were a longer-term investor, I would say you could be buying this stock at the 50-day around 336, and then even the lower end of this channel. And if you look over here, I have a line here which is the weekly uptrend all the way back from this last prior move back in 2009. So Apple, in my opinion, would be really compelling to be able to buy back on this uptrend, which it hasn't broken in over 2 years. So this would be a 2-year test. And that doesn't happen often in Apple, but with Steve Jobs potentially now returning and that announcement happening, we're at we're a little overbought in the equities market. If we get some kind of pull-in, that is feasible. But then from there, it could continue on its way. So as far as Apple's concerned, there's entries and exits on every time frame, based on what type of market participant you are. If you're an investor, I gave you a plan on how to handle this type of event. If you're a trader, there's going to be some volatility. There's going to be some good intraday action to base your trades and base the strategies off these levels that we also went over. And if you want to tune into T3 Live, every day in my morning call, I go over where Apple is on the open, how it's trading, what it looks at or what it looks like. Is there easy money? Is it a quick trade for a scalp? Could it be a longer term entry? And I can give you more explicit directions on how to maneuver this trade. This has been Scott Redler, Special Report. I wish the best to Steve Jobs' family. I hope everything goes well for him, and we'll see you at another time.